interest in Malaysia's markets? Are capital flows signaling stronger investor confidence? How do global money movements fit into Malaysia's broader macro picture? And what should markets be watching next? I'm Azaria Tagaya, and this is Money Matters. Hello there, good evening and welcome to Money Matters on your favorite channel TV3, which you can also stream on Tonton. Taking a look at rising capital confidence and how these trends are influencing Malaysia's financial markets, just some of the things that we'll be diving into today. And joining us in the studio to do just that is RAM Ratings Head of Economic Research, Woon Khai Jhek. Hi Khai Jhek, amazing to have you with us. How are you?
Thank you for having me.
Thank you. It's amazing to have you. Now, Khai Jhek, let's dive straight into taking a look at some recent capital movements. Now, foreign capital inflows into Malaysia have turned supportive in recent weeks. So from a market perspective, how can we actually read this sort of shift in investor behavior?
So to understand what's happening with the capital flows in Malaysia, I think not just the recent weeks, I think we have to look back to early last year. I think we have already seen some indications of increased interest starting as early as the second quarter. So we do see some form of inflows coming in, peaking around April and May period. Although, of course, there are some movements in between them, some outflows here and there, but we do see a further strengthening of the kind of sentiment heading into the fourth quarter of 2025. So we may ask, like, what is driving it and why are we seeing this increased interest? Yeah. There are multiple of drivers that's driving it, both domestically and globally. So if you look at globally, global monetary policy trends has been changing quite a fair bit, and a lot of it have actually turned in favor for Malaysia. So, for example, chiefly the key driver will be the US Federal Reserve. Mm-hmm. The US Fed has been moving its interest rate downwards as it continues to normalize its interest rate post-pandemic. So that has actually improved the yield differential between Malaysia as well as the US, so turning in favor of Malaysia. That has also naturally drive more interest into Malaysian bonds. Domestically as well, I think macroeconomic factors have been performing rather well for Malaysia. Mm-hmm. We do see economic growth have actually performed better than expected in 2025 despite the various US tariff threats, while inflation rate has also been relatively benign. So overall, some of the key indicators that we track also shows the economy is likely going to be rather resilient going into 2026 as well. Of course, there will be some downside pressure coming out from the materialization of some of the additional US tariffs, but what we are seeing is that structurally, Malaysia is on a very strong footing. Mm-hmm. And this combined with the ongoing fiscal consolidation that the government is actually ongoing, that will also continue to drive confidence and interest into the Malaysian market. So if I could say, maybe it's more of like both factors working in tandem. Stars seems to be aligned for Malaysia, at least for the last quarter and heading into 2026. So we are seeing some of the strength also continue to persist over the past few weeks, and I think it's good for that. Yeah.
Amazing, amazing. Now you mentioned some interest in bonds. So is there stronger interest in bonds or equities, or maybe it's a little mix of both? And how can we see the flow of these compositions in terms of investor confidence?
So in terms of flows of investments, much of it, at least if you look at 2025, much of it is actually concentrated in bonds. Mm-hmm. We do see roughly around 25.6 billion in terms of net foreign inflows into the Malaysian bond market in 2025, much of it concentrated in the fourth quarter as well. So a large part of it, as mentioned earlier, is also due to the better than expected in terms of interest rate differential turning in favor for Malaysia. Plus also that there is also that ongoing sentiment about decrease in terms of confidence with the US administration, given some of the uncertainties as well as the volatility that was introduced by President Trump. This created that sort of quote-unquote sell America pressure. Mm-hmm. That in turn also benefited Malaysia in some ways as well. But in contrast, if you look at equity market didn't really fare that well in 2025. We saw a total of roughly around 22 billion in terms of net selling in 2025. This kind of offset some of the 20 plus billion that we saw coming in from the bond market. So that's for 2024, but we do see some slight turning around at least in the first month of 2026. If you look at just the January data, we do see a return of foreign buying of roughly around 1 billion ringgit. This breaks that 3 consecutive period of net selling that we saw over the previous 3 months. So maybe we do see some improvement in terms of investor confidence, and I think this is also part and parcel is reflected in the recent rally when it comes to the KLCI index. KLCI, I think, recently have also rose to a high of around 1,740 points, which is the highest they've seen since 2018. So it's a good sign that I think markets are getting, both foreign and domestic, are getting a bit more confident in the Malaysian equity market as well.
All right. Now, Khai Jhek, what would you say is actually Malaysia's appeal? Now, most of these foreign inflows seem to be selective rather than broad-based. So what characteristics of Malaysia's markets do you think are sort of attracting these foreign inflows at this current point?
I think Malaysia stands out right now because it has a few factors that's playing in favor of Malaysia. I think, first of all, its yields has been rather appealing to most of the investors, as opposed to what they can get, say, in advanced economies. Emerging markets like Malaysia typically does offer a better risk-adjusted reward when it comes to yields. Malaysia also has a stability in play as well. I think compared to, say, other countries in the region, I think Malaysia's economic performance has been rather stable and resilient. That is also a plus point for investors. While I think policy side, fiscal policy has also been progressing relatively well. Ongoing fiscal consolidation is turning Malaysia into quite an impressive country in that direction. This, on a relative basis, shows that I think Malaysia is slightly better than some of the other countries. While I think traditionally, during periods of uncertainties, we also see some flows into safe haven countries. But I think if you talk about safe haven economies or markets, the US isn't exactly giving enough confidence for investors to continue to stay there. While I think another safe haven country like Japan has also its own trouble, which I guess, in a way, indirectly, the spillover benefits also is benefiting Malaysia in that sense.
All right. Now, we want to look more into that, but Khai Jhek, it's time for us to take a short break. After this, we want to talk about the capital movements and the relationship with, of course, the ringgit. Now, stick with us. More expert analysis is headed your way as Money Matters continues right after this. Welcome back. You're still with us on Money Matters. I'm Azaria Tagaya, and we're still talking to Woon Khai Jhek, RAM Ratings Head of Economic Research. Now, Khai Jhek, let's take a look at some of the drivers, or a deeper dive, if you will, because you went through some of that before the break. Now, when we look at the drivers of these capital movements, how much is actually driven by global monetary expectations, and how much is more Malaysia-specific, would you say?
I think it's very difficult to pinpoint exactly which one carries more weight in this sense, especially in terms of the recent episode. But I would say both have been working in tandem. As mentioned earlier, stars are aligned. I think the condition is just so good that investors are very attracted. Finds Malaysia's market very appealing. That's why we do see that form of strong inflows or strong interest into the Malaysian market so far. I think in terms of what is driving it and where is at play, I think both global and domestic factors are playing in favor of Malaysia. I think globally, if you look at the US Federal Reserve easing measures, that have actually played quite a big role in terms of driving investor interest into Malaysia. Because if you remember, like 2 years ago, we do have that very sharp depreciation episode where the ringgit depreciated quite sharply against the US dollar. A large part of it is actually driven by US dollar strength. Because of a very high interest rate or the rate hike cycle that we saw done by the US. So with that actually being gradually unwind, and we do see further rate cuts coming into the US, that's why we do see US dollar has been gradually, at least very recently, very steeply depreciated, and Malaysia has also in turn appreciated against the US dollar. So part and parcel of that has also been a factor of what has been driving inflows into Malaysia. Other than that, I think because of the better investor sentiment, we do see better risk appetite. That's why you do see a lot more attention being moved away from developed market into emerging market like Malaysia. And Malaysia being a country where the relative appeal is slightly better compared to regional peers. That's why we also see a bit more interest and has been driving all these global fund flows into Malaysia. I think domestically, I think investors do value steady economic growth. Malaysia has proven to be able to achieve that, at least if you look at just the 2025 economic growth. I think early advanced estimate shows that Malaysia is expected or estimated to grow 4.9% in 2025, which is much higher than where most people would have thought at the start of the year when the Liberation Day tariff kicks in. And I think research houses around the world have been cutting forecasts. Other than that, I think we also have contained inflation. I think inflation has been relatively benign, even with the initial fear about what would happen to inflation rate when the RON 95 subsidy is retargeted. Based on the few months that has been implemented, we do see the spillover effects into the rest of the economy has been relatively muted. So we do not see inflation being a very big problem that will actually bug investors that much, at least moving ahead. So all these factors have been playing quite a big role and have been working in tandem to actually support the investors' interest into Malaysia so far.
Okay, let's take a deeper look into capital movements and also its relationship and impact on the ringgit. How can we see these capital inflows? How can they help explain the recent developments in the ringgit and also the overall currency conditions, in your opinion?
Some fund flows does actually affect the ringgit exchange rate to a large extent. Because when you see a lot more investors actually buying ringgit assets, that requires them to actually also purchase the ringgit and sell, say, whatever country they are holding at the moment. Most of the time it's US dollar. That's why you do see when fund inflows comes in, usually you also see ringgit also appreciate in tandem. So the recent inflows into the Malaysian financial market have also seen in tandem appreciation of the ringgit, especially against the US dollar. But other than that, I think there are also some other factors, not just fund flows, that's actually affecting the ringgit. I think at least for the most recent episode, we do see there is that decrease in terms of confidence against the US dollar. And I think around the world, there is that trend where countries are trying to de-dollarize its economy to reduce its dependence and diversify its currency sources, which is why the lower interest in terms of US dollars has also resulted in a slightly weaker US dollar exchange rate as well. If you talk about also the most recent appreciation, there is also that correction, I would say, in terms of the ringgit at play. Because 2 years ago, the ringgit was severely undervalued, which is why we saw at its peak, we were almost at 4.2 ringgit against the dollar. as I think investors gain better confidence against the Malaysian ringgit, and they value the value that the Malaysian economy is actually providing. That's why you do see that correction in terms of undervaluation, and in turn also see appreciation of the ringgit against the US dollar.
All right, wonderful. Now, Khai Jhek, aside from beyond headline inflow numbers, what other market indicators do economists usually look out for to assess whether this foreign interest is likely to be sustained?
So beyond inflow numbers, usually we also track a few other market indicators to just give us a sense of how strong is the confidence or how strong is the demand of investors towards some of these Malaysian assets. So I think first of all, usually we also look at for the bond market, the bid to cover ratio. It gives an indication of how strong is the demand for whatever new supply of bonds are actually coming into the market. So a consistently high ratio usually depicts that demand is very strong, and there is actually strong interest from both the domestic and foreign investors towards some of these bond issuances. So usually for foreign investors, usually we particularly focus on the MGS and GI auctions, because these are where usually foreign investors are typically concentrated in. And we also look closely at the yield curve slope as well, or more importantly, is in the long duration end of the yield curve. Because typically, during periods of uncertainties or low confidence, investors will typically shun the longer end of the yield curve because it carries higher duration risk. So they typically try to minimize its duration coverage on that end. So if we do see a lot more interest on the longer end, then there's also indication that confidence and interest towards the Malaysian assets are stronger over the longer term as well.
Right. Amazing. Now, Khai Jhek, it's time for us to take another short breather. We are stepping away for just a moment, but there is plenty more to unpack after this. So we'll see you back here on Money Matters in just a moment. Don't go anywhere. for staying with us. We have with us here in this studio the head of economic research at RAM Ratings, Woon Khai Jhek. Now, Khai Jhek, going into this last part of our conversation, we want to look at the context of capital flows in Malaysia. So how do the current capital flow trends fit within Malaysia's broader macroeconomic environment, especially in terms of growth conditions, and also we're talking a lot about political stability. So how does that play into all of this?
So I think the recent inflow are very much in line with how investors value the Malaysia's macroeconomic environment, which I think it has been so far so good. 2025 has been rather resilient. Advanced estimate shows growth coming in at 4.9%, which is a relatively good growth considering what has happened at the start of the year, and it's also very close to our long-term average growth rate of roughly around that 5 to 5.1% mark. So generally speaking, I think historical performance has been very good, and if you look into 2026 as well, us at RAM Ratings have also cautiously optimistic about 2026. We have penned in a forecast for 2026 GDP growth to come in between that 4 to 5% growth. We are seeing some slight slowdown into 2026 compared to 2025, purely because of expectations of some materialization in terms of the downside risk or downside impact coming out from the US tariff. But all things considered, the 4 to 5% rate still indicates a relatively healthy economic growth for Malaysia. But if you talk about prices as well, inflation is expected to remain relatively benign in 2026. We are projecting inflation rate to come in between 1 to 2%, which is roughly in line with what we saw in 2025, which came in roughly around that 1.4% mark. So generally speaking, both key macroeconomic indicators are showing Malaysia is at a rather firm footing. And I think that has also boded well in terms of investor confidence into the Malaysian economy. I think other than just macroeconomic factors, I think investors also value stability. I think, as you mentioned earlier, the relatively improved political stability is something that the investors take comfort in because it reduces uncertainties in terms of their investors in Malaysia.
For sure.
And also the ongoing fiscal reforms and various reforms that we are seeing happening in Malaysia, such as the RON 95 retargeting, all are actually good for the overall Malaysia fiscal health as well. And the fiscal deficit is projected to narrow further in 2026. And that is also a good sign and something that investors value when they look at countries at which they want to invest into.
Yes, absolutely. Now, Khai Jhek, you mentioned a little bit about how this can be sustained in the long run, but now we're always hearing about this term geopolitical uncertainty, economic uncertainty. So moving forward, how do you think we can actually support the durability of these supported foreign inflows moving into the future?
I think definitely the uncertainty that we see in terms of, say, for example, geopolitical risks, all those are downside risks that investors are closely watching. If any of it actually happens, it would actually hamper some of the sustainability or in terms of durability of continued inflows going into 2026 as well. But if we talk about overall inflows, I think given where we are seeing in terms of 2025, surpassing 2025's exceptionally strong foreign inflows into the bond market is kind of a tall order to actually overcome. So it will be rather challenging, but I think given that what we are seeing in terms of the continued healthy foreign demand in 2026, especially coming on with the continued US Federal Reserve easing measures as well, we are seeing that the global backdrop remains rather favorable for Malaysia, and we should expect to continue to see foreign inflows into the Malaysian market, Malaysian bond market in 2026, albeit maybe the magnitude might not be as strong as what we saw in 2025. But of course, like you mentioned, sustainability isn't guaranteed. We are looking out for a few downside risk measures as well. Particularly if you talk about the US Federal Reserve movements, that's a key unknown or a key uncertainty that everyone is watching. If due to, say, US economic conditions where inflation run rampant and the US Federal Reserve is forced to hike rates, that would have opposing effects on the demand for Malaysian bonds, and that will also cause potentially further foreign outflows from Malaysia back into the US purely due to yield differential measures. Yeah.
All right. Now, Khai Jhek, from the recent pattern of foreign capital flows, from an economist standpoint, what do you think are some of the key messages that we can take from this, especially for market participants and also policymakers?
I think based on what we see in terms of what's driving foreign inflows into Malaysia, we can tell what investors or markets actually value when they actually come to Malaysia. I think, first of all, I think Malaysia offers the relatively attractive yield differential, the additional yields that they can get by investing in Malaysia. Other than that, another factor is also stability. We do see a lot more economic stability, fiscal stability, and fiscal resilience that we see coming to Malaysia. That is also something that investors actually value when they come to Malaysia. So all in all those have actually contributed to a stronger credibility into the Malaysian market. Investors trust that they would get a relatively healthy return by investing in Malaysia. And I think knowing that, I think, say for example, for the markets and for policymakers, they should take note of this, that perhaps these are what has been driving Malaysia as an ideal investment destination, and that is actually has been driving quite a lot of foreign inflows into Malaysia. And perhaps that's something we should work towards to improve further and actually maybe sustain and ensure that whatever demand that we see, whatever interest that we see, will continue to materialize going into 2026.
Yeah, definitely, definitely. Now, Khai Jhek, it has been amazing speaking to you. Thank you so much for all your insights today and for being with us on Money Matters.
Thank you.
Thank you. Now, you have been with us on Money Matters for the past 30 minutes. If you missed any part of today's episode, you can always catch it up on Tonton, and be sure to join us next week, same time, right here on TV3. I'm Azaria Tagaya. Thanks for watching and have a great weekend.